Bismillahirrahmanirrahim. This is the third video on managerial accounting. In this video, we will solve exercises on how to determine the total amount of various type of cost, how to prepare a cost of goods manufactured schedule and a partial income statement, how to prepare a cost of goods manufactured schedule and present the ending inventories of the balance sheet, how to prepare a cost of goods manufactured schedule, a partial income statement, and a partial balance sheet, and finally, how to prepare a cost of goods manufactured schedule and a correct income statement. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We also hope that this video helps fresh graduates who want to refresh their learning on how to calculate the amount of various types of cost. So let us start with solving an exercise on how to determine the total amount of various types of cost. Night Company reports the following cost and expenses. So we have the list of cost and expenses for the month of May. And this is what we are supposed to do. From the information, determine the total amount of manufacturing overhead. Now, manufacturing overhead costs are indirectly associated with the manufacture of the finished products in the factory. It includes all those manufacturing costs that cannot be classified as direct materials or labor. So, indirect materials, indirect labor, depreciation on factory building and machines, insurance, taxes, and maintenance on factory facilities are all classified as manufacturing overheads. So, first of all, we look into those all those manufacturing overheads. We have factory utilities, so this is a manufacturing overhead. Depreciation on factory equipment is a manufacturing overhead. Depreciation on delivery truck is not a manufacturing overhead because it is outside the factory. Then we have indirect factory labor, that is a manufacturing overhead. Indirect material is a manufacturing overhead. Direct material used is a direct material, and that's why it is not a manufacturing overhead. Factory manager salary is a manufacturing overhead. Direct labor is not a manufacturing overhead. Sales salaries, again, this is outside the factory, it is not a manufacturing overhead. Property taxes on factory building is a manufacturing overhead. Repairs to office equipment, it is outside the factory, so that's why this is also not a manufacturing overhead. Factory repairs is a manufacturing overhead. And then we have advertising, this is not in the factory, and office supplies is also not a manufacturing overhead. So we have factory utilities of 15,500. Then we have depreciation on factory equipment, that is 12,650. Then we have indirect factory labor, that is 48,900. Then we have indirect material, that is 80,800. Then we have factory manager's salary, that is 8,000. Then we have property taxes on factory building, that is 2,500. Then we have factory repairs for 2,000. So the manufacturing overhead is the total of all these uh, overheads, that is 170,350. Next, so that is part A, and we move on to part B. We have to determine the product cost. Now, product cost are a necessary part of producing the finished product that are matched with the revenues of a specific time, such as inventory. Now, these costs do not become expense until the company sells the finished goods inventory. At the point of sales, it is recorded as the cost of goods sold. So, for the product cost, we have the direct material used, and the direct material used is 137,600. Then we have direct labor, and direct labor is 69,100. And to this we are going to add the manufacturing overhead of 170,350. So the product cost is 377,050. Next, we have to calculate the period cost, and period cost are non-manufacturing cost. That means that they are incurred outside the factory. That is the main difference. We have just now talked about manufacturing overheads, and now we are talking about period cost, and these are the cost, these are rather the non-manufacturing cost, and they are incurred outside the factory. So it includes selling and administrative expenses, and such costs are deducted from the revenues in the period in which they are incurred to determine the net income. So we have this was part B, and now we are in part C, and in part C we have depreciation on delivery truck, that is 3,800. Then we have sales salaries of 46,400. Then we have repairs to office equipment, that is 1,300. Then we have advertising for 15,000. And finally we have office supplies used. You can see that all these costs are non-manufacturing costs that are incurred outside the factory, that is 2,640. So the total is 69,140. Next, let us explain how to prepare a cost of goods manufactured schedule and a partial income statement. So we have the Cepeda Corporation has the following costs. These are the costs. We have to prepare a cost of goods manufactured schedule, and when we prepare the cost of goods manufactured schedule, that is how we start. We start with the beginning work in process. To this we are going to add the direct material and direct labor. Then we are going to add the manufacturing overhead, and this will give us the total manufacturing cost from, and when we add the work in process, we are going to have the total cost of work in process, and then we are going to subtract the ending work in process to get the cost of goods manufactured. So let us see how we are going to solve this exercise. So we have work in process on 1st of June, that is 3000. Then we have direct material used, that is 20,000. Then we have direct labor, and direct labor is 40,000. Then we have manufacturing overhead, and for this we have the indirect factory labor of 4,500. Then we have factory manager's salary, and factory's manager salary is 3,000. Then we have indirect material, that is 2,200. Then we have maintenance factory equipment, that is 1,800. Then we have depreciation factory equipment, and depreciation factory equipment is 1,400. Then we have factory utilities of 400. So these are all our manufacturing overheads, and the total will be 13,300. And the total manufacturing cost, that is the total of 1, 2 and 3, is going to be 73,300. We sum up, that will give us the total cost of work in process, that is beginning work in process plus the manufacturing cost, that gives us 76,300. And from this we are going to subtract the ending work in process, and ending work in process is 3,800. We will subtract this amount and we get 72,500. So this is the cost of goods manufactured. This is part A of this exercise, and we will prepare the income statement on the next slide. So for this part B, they say prepare an income statement through gross profit for June 2014, assuming sales revenue is 92,100. So we have 92,100 as our sales revenue. From this we are going to subtract the cost of goods sold, and for this we have the beginning finished goods, and that is 5,000 finished goods on June 1st, that is 5,000. Then to this we are going to add the cost of goods manufactured, and we have already calculated in part A the cost of goods manufactured, that is 72,500. So this will give us the cost of goods available for sales, and that is 77,500. From this we are going to subtract the finished goods on 30th of June, and finished goods on 30th of June is 7,500. We will subtract this amount, and this will give us the cost of goods sold 70,000, and the gross profit will be 22,100. Next, let us discuss how to prepare cost of goods manufactured schedule and present the ending inventories of the balance sheet. Now, an analysis of the accounts of Roberts Company reveals the following manufacturing cost data for the month ended June 30. Now again you can see we follow the same steps. We have the work in process, we have now direct material, but then we have to record all the relevant information. For the direct material, we have the raw material at the beginning of the period. To this we will be adding the raw material purchases, that will give us the total raw material available, and from that we will be subtracting the ending raw material, and that will give us the direct material used. We are going to add up the direct labor, then we are going to add up all the manufacturing overheads that are there, that will give us the total manufacturing cost overheads, and To this we are going to add the beginning, we are going to add up the all these costs. That will give us the total manufacturing cost, and from to this we will be adding the beginning work in process. That will give us the total cost of work in process. We will subtract the ending inventory work in process to get the cost of goods manufactured. So let us see how we are going to solve this part. We have work in process on June 1. So we have raw material on June 1, and the raw material on June 1 is we start with the work in process. Work in process on June 1 is 5,000. To this we are going to calculate the direct material, and direct material is raw material on June 1, that is 9,000. Then we have raw material purchases, that is 54,000. And the total raw material available for use is 63,000. From this we are going to subtract the ending raw material, and the ending raw material is 13,100. So the direct material used will be 49,900. 49,900, and the direct labor is 47,000. So to this direct material and direct labor we will add up the manufacturing overhead, and for manufacturing overhead we have the over here we have 5,500 in direct labor, 5,500. We have factory insurance of 4,000. Then we have machinery depreciation, again 4,000. We have factory utilities 3,100. We have machinery repairs 1,800. Then there are miscellaneous factory cost of 1,500. So the total manufacturing overhead is 19,900. So the total manufacturing cost is direct material use plus direct labor plus manufacturing overhead, that is 116,800. To this we are going to add up the work in process on June 1. So this will be 121,800. Okay. And then we are going to subtract the ending work in process, and the ending work in process is 7,000. So we subtract this amount, we have 114,800. Okay. So that is how we prepare the cost of goods manufactured schedule for the month ended June 30. And we are going to go look for part B on the next slide, where they ask for the show the presentation of the ending inventories on June 30 balance sheet. So ending inventories are current assets, and inventories include finished goods, work in process, and raw material, and the ending raw material, work in process, and finished goods is given as 8,000, 7,000, and 13,100. So that makes 28,100. Next, let us discuss how to prepare a cost of goods manufactured schedule, a partial income statement, and a partial balance sheet. So the following data were taken from the records of Clarkson Company for the year ended June 30, 2014, and we have the list of accounts are there and costs are there, and we have to prepare a cost of goods manufactured schedule. Assume all raw material used were direct materials. Okay, so once again we start with work in process, and the beginning work in process is work in process, and this is for the month of June. Also February, March, April, May, June, and June is 19,800. To this we are going to add we are going to now go for the direct material, direct labor, and the manufacturing overhead to determine the total manufacturing overhead. So we have raw material on first, and on first the raw material is 48,000. Then we have raw material purchases, and raw material purchases is 96,400. So this gives us the total raw material available for use, that is 144,400. From this we are going to subtract the ending raw material, and the ending raw material is 39,600. So the balance is 104,800, and this is the direct material used. To this we are going to add the direct labor, and the direct labor is 139,250. Next we are going to determine the manufacturing overhead. For this we have the plant manager salary, that is 58,000. We will add the factory utilities, and the factory utilities is 27,600. Then we have the indirect labor, and indirect labor is 24,460. Then we have factory machine depreciation, and factory machine depreciation is 16,000. Then we have factory property taxes, and we have factory property taxes of 9,600. Then we have factory insurance, and factory insurance is 4,600. Then we have factory repairs, and factory repairs is 1,400. So the total manufacturing overhead is 141,660, and we add up the direct material used, direct labor, and the total manufacturing overhead to get the total manufacturing cost, that is 385,710. To this we are going to add the work in process at the beginning of the period, and this will give us 405,510. From this we are going to subtract the ending work in process, and ending work in process is 18,600. That will be 386,910. Okay. So that's how we prepare the cost of goods manufactured schedule, as we have done just now. And we go to part B. On the next slide we have to prepare an income statement through gross profit. So we have the income statement. For this we have the sales revenue, and the sales revenue was 534,000. 534,000. From this we are going to subtract the sales discount of 4,200, and that will give us 529,800. Next, we calculate the cost of goods sold. For this, we have the beginning finished goods inventory, and the beginning finished goods inventory is we have finished goods inventory of 96,000. To this, we are going to add the cost of goods manufactured, and the cost of goods manufactured we have calculated over here, that is 386,910. So that is 386,910, and this will give us the cost of goods available for sales, and that is 482,910. From this, we are going to subtract the ending inventory and the finished goods inventory, that is 75,900. We are going to subtract the ending inventory, that will give us the cost of goods sold, that is 407,010. And this cost of goods sold will be subtracted from the net sales to give us the gross profit, and this will be 122,790. So this is part B of our exercise, and we go for the third part. Prepare the current assets section of the balance sheet. And for the current assets section, we know that current assets are, we have cash, and cash is 32,000. Then we have accounts receivable of 27,000. Then we have the inventories, and inventories we have the finished goods inventory of 75,900. Then we have work in process on 30th of June, that is 18,600. 18,600. And we have the raw material of 39,600. Don't forget that when we prepare the balance sheet, we take all the relevant information at the end of the period. So that is going to be 39,600. So the total inventories is 134,100, and the total current assets is cash plus accounts receivable plus inventories, that is 193,100. Okay. Next, let us explain how to prepare a cost of goods manufactured schedule and a correct income statement. So Philips company is a manufacturer of computers. Its controller resigned in October 2014. An inexperienced assistant accountant has prepared the following income statement, and we have to see what they require. So this is how he has prepared the income statement, and it shows a net loss of 23,000. Prior to October 2014, the company has been profitable every month. The company's president is concerned about the accuracy of the income statement. As a friend, you have been asked to review the income statement and make necessary corrections after examining other manufacturing cost data. You have acquired additional information as follows. We have the raw material at the end and beginning and end. We have work in process, finished goods. Then number 2, only 75% of the utilities expense and 60% of the insurance expense apply to factory operations. The remaining amount should be charged to selling and administrative expenses. So we will look into this part as well. And first of all, we have to prepare a schedule of cost of goods manufactured for October 2014. 14. So we have part A first of all, and we start with the, as usual, with the work in process on October 1, and work in process on October 1 is 16,000. Then again we have work in process. To this we will be adding the direct material. We have raw material inventory on October 1st, and raw material on October 1st is 18,000. Then we have to this we are going to add the raw material purchases, and the raw material purchases is 264,000. So this gives us the total raw material available for use, that is 282,000. From this we are going to subtract the ending inventory, and the ending inventory is 29,000. 29,000. So 282 minus 29 will give us the direct material used, that is 253,000. To this we are going to add the direct labor, and direct labor is 190,000. Then we are going to calculate the manufacturing overhead, and the manufacturing overhead is rent of factory facilities 60,000. We have depreciation on factory equipment, and depreciation on factory equipment is 31,000. Then we have the indirect labor, and indirect labor is 28,000. Then we have factory utilities, and don't forget that 75% of these utility expenses are going to be considered as manufacturing overhead. So factory utilities, 75% of 12,000 is 9,000. For factory insurance, we are going to have 60%. 60% of factory insurance, that is 8,000. So if 60% will be 4,800, and the total manufacturing overhead is 132,800. So we have the direct material used, we have the direct labor, we have the total manufacturing overhead, and when you sum this up we have 575,800. To this we are going to add the beginning work in process, that will give us 591,800. From this we are going to subtract the ending inventory, ending work in process, and ending work in process is 14,000, and this gives us the cost of goods manufactured as 577,800. Okay. On the next slide, we are going to prepare the correct income statement, and let us see how we do that. We start with the sales, with the sales, net sales rather, and the sales is 780,000. Then we calculate the cost of goods sold. For this we have the beginning finished goods inventory, and the beginning finished goods inventory is 30,000. Cost of goods manufactured we have calculated in part A, that is 577,800. 577,800. Then this will give us the cost of goods available for sales, that is 607,800. From this we are going to subtract the ending inventory, that is 45,000. So the cost of goods sold is 800, 562 to 2,800, and when we subtract the cost of goods sold from the sales, we get the gross profit of 217,200. To this, we are going to add all the operating expenses like advertising. We have advertising over here for 90,000. Then we have selling and administrative salaries 75,000. We have depreciation on sales equipment, that is 45,000. Don't forget utilities, 75% was manufacturing overhead in the previous exam, in the when we prepared the manufacturing overhead, and the remaining 25% are going to be the operating expenses. So 25% of 12,000 is 3,000. Then we have the insurance expense. Remember, 60% were manufacturing, were for the factory, so the remaining is going to be for the operating, and 40% is going to be 3,200. So the total operating expenses will be 216,200, and the net income will be 1,000 and not a loss of 23,000. So this completes the third video on managerial accounting, where we solved exercises on how to determine the total amount of various type of cost, how to prepare a cost of goods manufactured schedule and a partial income statement, how to prepare a cost of goods manufactured schedule and present the ending inventories of the balance sheet, how to prepare a cost of goods manufactured schedule, a partial income statement and a partial balance sheet, and finally we have explained how to prepare a cost of goods manufactured schedule and a correct income statement. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.